How we doing, traders? Welcome to the SPACs attack. Let's get it started. How we doing, traders? Welcome to the SPACs attack, where we talk everything SPACs. And if you guys can hear me all right, definitely smash that like button down below. Let's hit the subscribe button. Let's keep going. Let's bring in my man, the brains to the show, Chris Ketchy. What's going on, man?
Hey, what's up, Mitch? How we doing today?
Hey, another day in the market. And one thing I can say is that we've been taking a hit. We've been taking a hit, man. And we're going to have to take a look. But super excited to get to our interview later on today. If you guys don't know, just stick tight. We got a great interview for you later on today. And one thing that I am going to be going into is there's a lot of trends that we're going to be talking about in this interview. And I think it's going to be really good, not just for this SPAC, but also looking at some other SPACs. So definitely stick tight, guys, and super excited to get into today's show. So, Chris, how are we doing today? You want to take us into some headlines?
Yeah, let's get started with some headlines out there. All right, guys. Yeah, so before we get to our interview, we do have some headlines, lots of analyst notes, and then we do have a couple new deals to get into and some movers. We do have a lot of SPACs going down today, as the trend has shown the past couple days. So we'll dive into that with our watch list later on. But first up for headlines, we have Hims, so MS. This is Hims and Hers, former SPAC. Notable upgraded price target from Citigroup here, upgraded to buy and a $23 price target. This ARK Funds has actually been selling, exited that position, had a nice run over $25, and now shares were trading under $16. This is one to watch in that digital healthcare telemedicine space. So interesting upgrade there and that new price target. Then XL Fleet. So XL Fleet, right, is one that Mitch and I have been talking about on the show. Former SPAC, it ran up into that announcement, got lots of media coverage, and it has sold off since. This is an electrification play, a plan to, electrify all the government vehicles. So the CEO was on Cramer's Mad Money last night. Cramer's been a big fan of this company. The stock is down today, but a couple notable things from that interview last night. So they discussed the company's deal with UBS Arena for charging stations. And the CEO said that they have many more deals like this in the work. So at UBS Arena in New York City, they're going to provide 1,000 electric vehicle chargers. When completed, this will be 7 times larger than the current largest public charging facility. So definitely a big deal. And now we're seeing XL Fleet, get more into the charging side of things, along with electrifying those trucks and vehicles. So keep an eye out on XL. Then some more ratings. We have SPCE. This is Virgin Galactic. I am long this stock. Bank of America out today, reiterating a buy rating, and then also raising the price target to $50 from $35. An upside for new investors. Also mentioning, how this one, a lot of people have sold off, due to the timeline and the delays of those space flights. So again, if you believe in the long-term story, space flight, taking passengers to space, you may have a good point here with SPCE. And again, I am long shares of that stock. Then we have ChargePoint. So this was formerly SPE. It is now CHPT, getting an outperform rating and $39 price target from Oppenheimer. This is the first time, that analyst has talked about this one. They called it the leading play on electric vehicle charging infrastructure, proprietary software and hardware and cloud-based networking solutions. So definitely something to keep in mind. And again, as we have seen lots of different charging infrastructure plays, here is one that analysts are starting to love now that that deal has been completed. And then turning to ARK Funds, so continued to add a couple SPACs. So, Kathy Wood has been adding SPACs even before they complete those deals. She's been adding SPACs sometimes on day one of that announcement. So added two positions yesterday in ACIC, which is taking Archer public, and EXPI taking Blade public. Those are both urban air mobility companies. And then also add size stake in AONE. That is the company merging with Markforged, 3D printing, additive manufacturing, strong customer base. So if you want to hear more about Kathy Wood and some of those SPACs she has been adding, guys, if you do not know, at 2 p.m. Eastern time today, Kathy Wood will be joining Benzinga live to sit down with our CEO, Jasnik, to get some of our questions answered, about SPACs, about Tesla, and about, what she is seeing in the overall market. So don't miss that interview later. And then we had some new SPAC filings yesterday. The notable one for me was that Atlas Crest is adding a third, fourth, and fifth SPAC to the market. So Archer is the same group that took ACIC, that Archer deal public. And then they also have ACII, which does not have a deal. So as you know, when some of these groups issue new filings for additional SPACs, we tend to see a deal announcement sooner than later out of the existing ones. So ACII, which is still trading in units, is a SPAC to watch on that news. Our two deals yesterday, both down 6%. So we had ACND merging with Beacon Street Group and TWND merging with Complexus. So again, we're seeing, these SPACs, they get a little bit of a pop in the morning, but, if they are not in a sector that investors love, we are seeing some of these SPACs trade down, by the end of the day. So both of those closed down 6% yesterday. Then turning to deals. So yesterday, we had a deal announced late after market close with CAP. This is Capital Investment Corp 5. A deal with Doma. This is a disruptor in the closing process of the residential real estate industry. Projected revenue of $416 million in fiscal 2021, up only 2%. 2022, $514 million projected, up 24%. This was done at a $3 billion valuation. And then our other deal this morning, we have ticker VMAC. This is Vista's media acquisition, merging with Angami. This is a music streaming platform in the Middle East and North Africa. Pretty notable, as this will become the first technology company to list on the NASDAQ. So significant there. And then they are seeing significant growth. So I see here more than 7 million songs to more than 70 million registered users, 1 billion streams per month. They've grown revenue 80% over the last 3 years, and they're expecting to grow revenue 5 times over the next 3 years. So definitely have a high growth plan in place there. And I want to touch on our big rumor out there. You heard Mitch and I talk for a long Sport Radar. So Bloomberg is reporting that Horizon Acquisition Corp 2, that's ticker HZON, isn't to bring Sport Radar public. So this is the SPAC from Todd Boehly, who owns the Los Angeles Dodgers, and DraftKings founder Jason Robbins. Sport Radar provides data to sports betting companies. Investors in Sport Radar include the NFL, Michael Jordan, and Mark Cuban. They have an exclusive deal with the NFL. They also have deals with MLB, NBA, NHL, and the Tennis Federation. Last year they actually they had relationships with all 4 of the major sports, right? So MLB, NBA, NFL, and NHL. That's a big deal as they provide that data to the sports betting companies. That deal with the NFL was an exclusive deal, and that is set to expire this year, which could be a key point, with getting this SPAC done and the valuation. Because if you're an investor and you want to take Sport Radar public, you you want to know what's going on with that NFL deal. So the NFL invested in Sportradar in 2015 and 2019. So they do own a stake. So there is some incentive there to, help the growth of this company. So we will see what the NFL does. And then Revolution Growth is also a backer of Sportradar, and that is from the team that is Ted Leonsis, who owns NBA and NHL teams. So here you have a company going public, possibly with a SPAC, and both have interest from sports owners and then also have ties to DraftKings. The thing that I'm watching is, what does this mean for Genius Sports, which is going public with DMYD? How does the valuation play into that? And then all Sports has a relationship with DraftKings. How does that go in the future with this SPAC possibly taking a rival public that has relationships with DraftKings? So a couple things to watch there. Also, remember, HZON is just a rumor at this point. Shares were up this morning about 20%. I was a little surprised actually that this thing was not up more, but again, with the market we're seeing, it shouldn't be too surprised. I'm showing 1189 up 18% right now. But, this is one I'm looking at, right? Because if they get this deal done, Sportradar is one of the companies I've wanted to be in for a long time. Again, they have that duopoly with Genius Sports, but it looks like, Sportradar relationships with MLB, NBA, NFL, NHL, and key relationships with lots of sports team owners and possibly DraftKings now, which could be some differentiating factors. And I want to talk for a minute. We had some big news, DraftKings this morning, right? So DraftKings, former SPAC, they announced a deal with Dish Network. So that is going to DraftKings Sportsbook and daily fantasy games directly to Dish Network customers nationwide. Bets and contests can be initiated directly on the television. This will begin with Dish TV's Hopper platform and then expand across other Dish brands like Sling TV and Boost Mobile. And then of note, DraftKings will host a virtual investor day on March 9th. So Mitch, I know those last two items in the news, you probably want to talk about here. That's why I put them last. So let's dive into Sportradar first. What do you think? I know HZON wasn't really on our radar, but with that relationship with the DraftKings founder and the owner of the Dodgers, maybe we should have seen this one coming. But what do you think with Sportradar and kind of the comparison with Genius Sports here?
Why, oh, why, oh, why? That's how I woke up this morning, guys. I'm not gonna lie. I'll be honest, guys. I thought I had this one. And you got to be quicker than that, they say. Definitely, I thought it was gonna be SEAH. I even had a little bit of BHSE. I had a couple of them that I had on watch also, but hey, that's how it happens, guys, and that's what it's about in the SPAC game, and that's why I diversify, and you don't put all your eggs in one basket. So hey, I'll look at my other plays, and I'll just sit back on these, and maybe get some lower risk if I could get it a little bit lower today. Downsize my risk. That doesn't seem too bad. I still have some cash in the portfolio, so really trying to measure in here if this is really going to be the best time. But we got to pay attention to all SPACs right now because we are finding a little bit of a troubled time in a troubled area. So this is when you have to really start measuring in and also keeping the risk in mind, because if you're not keeping the risk in mind, then you can get caught in the market right now. Another one that I'd like to talk about is, of course, that partnership. I think that partnership's interesting, just because we've talked about on this show about Fubo and kind of their deal with Balto. But one thing that I'd pay attention to Dish is Sling, because that's really where I pay attention to Dish, and I think they have the best advantage. Their streaming service that they actually have under their belt is actually one of the best, I think. It's the one that I choose just because if you look at the overall packages that they offer, hey, you can get pretty good TV for about $50, and there's not many places that you can get TV for $50. So at least comparable to Fubo, I would say that it was the cheaper and better quality service. So I'm going to be paying attention to how this happens from this movement on. Not only in Dish, guys. Let's start looking at the whole streaming industry and seeing if they keep blending with the sports betting industry. Because if that keeps happening, we can find other plays in the industry before the catalyst actually comes. And that's what I always try to do, guys, is try to find a story and try to be in line with the catalyst so that you can run into maybe one of those catalysts with some good technical timing. And that's really what the story strategy is all about. So we'll take a look at this. It's interesting. What do you think, Chris, as these streaming services dip their toes in some betting content?
Yeah, I wanted to get into this because I think we've had some good conversations about Fubo before, and then also DraftKings, right, being the kind of the market leader as far as brand awareness in the most states. So Fubo reported earnings last night, right? And they talked about their sports betting, plan. And they talked about laying out, daily games in the third quarter and then launching with sports betting in the fourth quarter. And then here swoops in DraftKings and Dish Network the next morning to kind of steal their thunder. And to me, I do own some shares of Fubo. I just want to get that out there. So to me, Fubo has a good opportunity, and I was looking forward to that fourth quarter. But I think DraftKings and Dish now are going to beat them to actually having the product out there. And I wonder if that's going to hurt Fubo at all as far as that possible first mover advantage. And, like you said with Dish, Sling TV, I think is the key here. And, look to some of those other streaming plays. And the other thing that we've seen, right, with sports betting companies is a lot of them partnering, right, with casinos. And then they started partnering with media companies, right? So we saw, deals done with ESPN. We saw, of course, Penn National do the deal with Barstool Sports. Do we get the synergies now where Dish Network and DraftKings do this partnership? Who does FanDuel go after? Do they look to partner with the streaming company? Because that's the key here, right? And I wrote an article this morning, and one of the keys is, and I can say this personally, right, as someone who can bet legally on sports in Michigan now, if you bet on a sport, you're more likely to watch the sporting event. So if you're Dish Network and you can have people betting on sports directly on your platform, you're more likely to see people engaged, watching more content, watching longer content, which means more ad revenue. It means keeping loyal subscribers, and it means possibly getting subscribers from rivals. So to me, I still think Fubo has a huge opportunity because they already have a plan in place to launch this year. And I think maybe someone will look to partner with them, right? And otherwise, we're going to see more deals done. I think this was the starting point here with the domino effect coming to sports betting and media.
Hey, like always on SPACs Attack, we don't only just try to teach you about levels. We try to talk about a lot of times trends, because trends are what get these things to start moving. A lot of times you're going to see it. I pay attention to trends all the time, whether it be social trends or even just looking at Google Analytics. Look at Google Trend Analytics, guys. See what's moving. See where it's moving. A little bit later today with the Kathy interview, one thing that Kathy did was she actually looked at Google Trend data on Tesla, and she looked at the Google Trend data for the truck, the Cybertruck, right? And so she looked at it, and she looked at it in the middle section of the United States. How is the Midwest kind of feeling? Are they going to be buying this truck? And those are the things that you guys can be doing the same thing. Look for those trends, and then you can step in front of the trend and then look for maybe, hey, okay, so what are the leaders? Who could they team up with? What are the options? And then that's how you start diversifying your attack into kind of this trend, this story. So definitely, let's go ahead and let's get into our interview, the best time of the day, where we go ahead and unlock some SPACs. So let's go ahead and unlock them. All right, Chris, let's go ahead and bring on our guest, Matt.
All right, super excited again. We have with us today Matt Higgins. Matt is the chairman and chief executive officer of Omnichannel Acquisition Corp. That is ticker OCA. So thanks for joining us on the show today, Matt.
Thanks for having me. I'm so excited. Where are the cardboard cutouts, though? I saw another interview. He had cardboard cutouts, and I kind of came prepared for that. I have sharks behind me. You can see that.
There you go. Sharks.
we know another investor that had some sharks in there, but they were like great whites. You know what I mean?
Yeah.
So we'll get to that great white level, right?
Exactly.
All right. I'll let Chris lead with some questions, and then I'll be back.
Great.
All right. So before we dive into your SPAC, Matt, you have an exciting background, right? So I read through this, and you've been involved all kinds of investments. You've also worked with the New York Jets and the Miami Dolphins. Can you just walk us through a little bit of your investment history and what you're currently doing now?
Okay, great. Kind of hard to package my entire career because there's different buckets, but I guess areas of competency. First and foremost, I'm a builder. I know how to build things, especially in complicated environments. I helped oversee the rebuilding of the World Trade Center site. Right after the attacks on 9/11, I was there from the first minute and stayed for 2 years until we had a plan to redevelop the entire lower Manhattan. So that's my background, and my investment career has been about getting my hands dirty. I have played at every level from early stage, investing off of a deck, all the way riding into a unicorn to acquiring 20 to 40% stakes in consumer brands to outright acquisitions. And the common thread through all is I'm always looking for ways to add value. I love the consumer space, particularly the direct-to-consumer space. I teach a course at Harvard Business School that's all about the omnichannel journey called Moving Beyond DTC. But that's my passion, backing great brands, great founders, and figuring out how to provide value in an egoless way.
Perfect. So, you mentioned behind you there, you have Shark Tank up on the screen. So you were a guest shark on Shark Tank. How did that experience compare to the SPAC searching process and maybe some of your normal, investment business?
That's a great question. Well, first of all, to those who are fans, I've always been a huge fan, right? Grew up a kid in Queens. I grew up, dirt poor, scrappy, always wanted to be an entrepreneur. So to go from, Queens to all the way to Shark Tank was, a huge leap. And I was excited to be there. So a couple of things. To those who love the show, it is authentic. Like, you don't know who's going to walk through that door, which is interesting, right? Because for me, if to find out otherwise, would have been like, oh, there's no Santa Claus, right? Like when you're a little kid. So it's authentic. And once the cameras start, first, before everything starts, everyone's nice. Hey, Matt, and Lori Grenier is very friendly. Once it starts, everyone's talking over you, and they are fighting because it's real money that you're putting to work. What I find fascinating is you have 45 minutes to do what you frankly do in a SPAC search over the course of weeks and months, to dissect whether or not this is a founder that is worth backing, right? Think about that. So you're spending a lot of mental energy first saying, is this something I want to do? Is this a business that's worth my time? Is it scalable? Can it be big enough? And then also, once I've made the decision, now how do I beat, Kevin O'Leary to a pulp? How do I differentiate myself? Kind of not that dissimilar to what's going on out there in the marketplace. You have to represent, why am I different? Everyone's got a SPAC these days, right? There's clearly, a bit of a glut. So it's, how do you stand out? How do you differentiate? How do you add value? And I love it. I mean, I love it just as much as being on that set. I love being out there in the SPAC marketplace.
I don't know if this question will get you in trouble at all, but who's your favorite shark on Shark Tank?
Okay, that would get me in trouble. So let's start there. So let's
ignore it. Then I just thought maybe one.
No. Let's do a shark segmentation strategy. All right. Who would I most want to? Who do I think is living their best life and who's most fun to hang out with? It's definitely Kevin O'Leary. Who's the one I want to go on a double date with my life? It's Lori Grenier. Who's the guy I want to go ahead and kick back cigars and hang out all night with? That's Damon. It goes on. And who's the guy who want to do a multi-billion-dollar merger with? It would be Mark Cuban. How's that for a diplomatic answer?
That is a perfect answer. And yeah, I think if me watching, if I was going to do a deal, I'd probably pick Cuban too. So I want to dive into your SPAC. So strong management team here. Obviously, you have lots of experience, but you brought some great people along with you. Obviously, in my opinion, Gary V stands out, right? He's a well-known person, through his ad agency and some, key investments in some large companies. So why is it important to have Gary V attached to this SPAC?
Well, let me give you a little bit about the composition. We start there for a second. I think it's important for anyone out there who's deciding where to put your money to work. You were just talking about, you were dead on trends, right? Trends, but also people, right? And when you look at a SPAC, to me, I think first and foremost, you want to identify SPACs that have a bias towards operators. There was a great study that came out. McKinsey did it last September. That was basically earning the premium, and it was all dissecting the performance of 36 SPACs over the course of X number of years. And what they found is that there's a cohort of SPACs that are led by operators, chairman or CEO role, somebody who knows how to build a business, and that cohort outperforms other SPACs by 40%, and the S&P sector even by 10%. And the reason why, when they delved deeper into the study, was a few reasons. One, if you're an operator, you tend to stick with what you know. You tend to have a much more tailored thesis. Two, you know how to diligence. You know how to summon people to help you do the diligence. And three, for a variety of reasons, you tend to stick with it from a governance standpoint. You stay on the board. You care a lot, probably reputationally, but also that's your DNA. So my SPAC, Omnichannel Acquisition Corp, is modeled after that study and also my own experience. I have been involved with endless number of founders, including Gary Vee. So let me give you the Gary Vee scenario. I met Gary Vee when I was overseeing the business of the New York Jets, and I had the crappy job of having to go try to sell him a suite at a bagel store in New Jersey. And, the first 10 minutes I was listening to Gary pontificate about how social media was going to play out, blah, blah, blah. The second 10 minutes, I was like, you know what? This guy can see the future. He's probably underestimated. Him and his brother were going to start a firm called VaynerMedia to help big companies manage social media because they weren't going to be able to keep up with Twitter at the time and everything else coming down the pipe. This is 2009. And I did a deal with him at that bagel store. I'll give you 4 Jets tickets if you can go ahead and make us the team that's innovative and take one player and make them pop, in a way they wouldn't otherwise do. And he actually did it with Safety Kerry Rhodes, for those of you who are Jets fans. And that was the beginning of our relationship. I went back and I acquired a significant portion of that firm. So Gary and I have been partners now for almost a decade, and I have firsthand visibility into what he can bring. Expand out that idea. If you look at a board of advisors and board members, 21 people, I have 10 founders on that team. Each one of those founders is designed to provide value to an ultimate target in a way that I have seen. Oftentimes a founder could need help. So let's use Gary. Our firm is the agency of record for TikTok. Gary, whether you love him or not, I love him like a brother. He can see the future. The ability to harness those types of resources and insights is invaluable on behalf of a consumer business. And each one of the people on my team are there to unlock value, with the idea being, this is a difficult transition to go from a private company to a public company. You're nervous, you're anxious, you don't have all the answers. To put a team of operators together, is invaluable. And that's the vision of the entire group. If I went through each person, which I'm not going to do right now, you'd be able to identify how I architected this group to help a founder.
Yeah, and that's one of the keys with SPACs. We'd love to sit down and talk about each member. I know you have a lot of team members. The other one that jumped out to me was Albert Carey, the former CEO of Pepsi North America. So let's dive in a little bit to the target market here. So looking at omni-channel businesses and brands, why is that an important market to target with this SPAC here?
So I'm saying nothing that's not obvious. Everybody's been paying attention the last year, but there's been a compression of 5 years of e-commerce growth into 9 months, probably longer, to be frank. I think that's actually underestimating. The course I teach at HBS is all premised on the idea that a digitally native brand won't stay that way for very long. You have to go omni-channel in order to be successful. What you find is these great, brands with, we all know the marketing, we all know the different brands that I'm talking about over the last 10 years since Warby Parker. They start out digitally native. They can do rapid customer acquisition because they can get to you through Instagram and whatnot. But what you find is the customer acquisition cost, CAC, begins to rise up over time as other incumbents rush into the space that you thought you were going to have to yourself with your new business, and it becomes a lot more expensive. What are you going to do? You're going to go omni-channel. You're going to go into retail. You're going to go into what and whatnot. That has only been radically compressed in the last 9 months, where the consumer expectation now is frictionless omni-channel commerce. If I walk into Walmart, I don't really care that I'm buying at the register versus buying on the phone now. I want complete flexibility to either have that item delivered at home, pick it up curbside, whatever it is I want. So it's that expectation of frictionless commerce that has changed everything. Sorry about that. In the last several months, the problem is going omni-channel, whether you're a brick and mortar operation or you're a pure play digitally native brand, is not an easy transition. We throw these words around, omni-channel. What does it really mean? For example, it means that your tech stack at your point of sale system needs to be able to talk to, your mobile, right? Those things need to be integrated. So a lot goes into it. So in forming this SPAC, I said, what are the key areas that if I'm running a modern consumer business that needs to go omnichannel, that I'm likely to be deficient in? And how do I bring those resources to bear on behalf of a future target? Again, you're putting the group together before you obviously have a target in mind. So a lot of it's theoretical, but in teaching at Harvard Business School, there are certain areas that I find tend to be missing. I'll give you an example. If there's an amazing business that you haven't heard of out there in SPAC land or whatnot that has tremendous growth, but you probably haven't heard of it, it's because they're probably over-indexing on performance marketing, growth hacking, CAC to LTV ratio, all the alchemy of customer acquisition, and under-indexing on brand and halo. So there are some great people on my team. Emmett Smith is an example, a founder of a company called Gin Lane, who did the marketing behind Sweetgreens and Recess and Smile Direct and a bunch of other great brands. So it's those kinds of sensibilities that I put together in this team.
Perfect. So, you brought up a good point that leads into my next question, talking about, valuing these private companies in a potential SPAC deal. So, my question was, with so many SPACs searching for targets, how do you make sure you don't overpay for a private company? And my follow-up now, based on you talking, these companies seeing tremendous growth during the pandemic, is, how much attention do you pay to some of those, comparables that we'll have in the future post-pandemic?
Great questions. That's why it goes back big picture as you're evaluating who to get behind in a SPAC. You're really evaluating their capacity to diligence a deal and to get, great deal flow, right? Because the best decisions are relative decisions. So you need to look at tons of companies, hundreds of companies, ideally, to be able to make great relative decisions. And you need subject matter expertise so you can effectively discount. This has been such a disruptive event to be able to figure out, okay, what is a steady state? What's likely to outlast the pandemic versus what was just, a bump? What I think makes us different is that I can pull in those resources to be able to do it. Plus, I own several of these businesses that are doing the exact same thing, whether it's a smaller stake or outright ownership. Some great brands you may have heard with Milk Bar. I've been an investor in Milk Bar, significant owner of Milk Bar for a number of years. So I'm playing in the omni-channel space at the real time, which means I have a pretty good sense at this very second what is an inflated, or what is actually a artificially lower CAC that's likely to increase post-pandemic, or I have a pretty good sense of that. But it's a great question. You always have to ask yourself when you're backing a SPAC team, are these people in a good position to be able to evaluate what is real, what's sustainable, and what is, episodic, what's a fad?
All right. I want to jump in here because you mentioned someone that I know very well, Christina Tosi.
Oh, good. How do you know Christina?
Well, my fiance's are really big on bacon, so she was actually interested in when during the pandemic she started that everyday kind of posting of her kind of recipes, her ideas, and really it's called the basics.
Baking Club, 2:00 every day. By the way, for those who are interested, it's not every day now, but it was every day back then.
And it's really built. And I have a feeling you had something to do with that. So I'm not going to give you too much there, but I could tell that she got some strategy there. And I was even impressed by the strategy.
Well, that's great. Let's talk about that for a second, because that goes back to the operator experience. Like when the pandemic happened, I remember talking to her in particular, but all of my CEOs, and saying, let's not reflexively scramble to rebuild the world as it was, only to wake up a year from now and say we built a relic. Like, let's ask ourselves, if I were building my business today, what business would I build? At Milk Bar, we have a lot of stores, right? We're pretty heavy retail, but Christina Tosi is magic. To know her is to love her, is to want to transact in her. And we had always been wanting to, how do we really just attack DTC and e-com? How do we go into CPG? And I remember having this great tender conversation. We're like, let's just go back to basics. Let's just start doing a live show. This is not my idea, it's hers. Let's do a live show on Instagram. Let's maybe we shut down some stores and let's go heavy on DTC. By the way, remember all these ideas we had for consumer products? Let's just go do them. Fast forward, the business has been transformed in this last year because she didn't hold on to the past. She grabbed the future and was like, I'm going to rush right toward it. Now we're in Whole Foods and Targets with multiple SKUs, multiple products. And to me, that's also an example of reverse engineering an omni-channel business that was pure play brick and mortar. I think, not to jump off Tosi, what is interesting is watching some of these businesses out there who are sort of stodgy brick and mortar, kind of weren't really the winners of the Amazon era, right? Are now saying, wait a second, I have all this fixed infrastructure that for a while felt like an albatross, is actually an asset because I'm closer to the customer than you, pure play DTC. I can do last mile delivery, thinking about a company called Walmart, right? Like they've got all this distribution. So the pandemic gave an opportunity for Tosi and a lot of businesses to say, are you going to grab the future or are you going to hold on to the past? I like to think the ones in my portfolio have done great, have grabbed onto the future. The other ones, actually most have done great. I have to say my team has been phenomenal. It was gut wrenching, but they've done pretty good, adapting.
Yeah, what I'd have to say to that is, we actually heard it from Kevin O'Leary really close in the pandemic. He called it America 2.0, and that everyone had an opportunity here to really take advantage. This wasn't really a moment to be afraid, but a moment to take advantage. So,
so to talk about Kevin O'Leary, one of the things I'm great about is stealing his ideas shamelessly on the show and outside of the show. So actually, as part of my SPAC, I talk a lot about the Great Digital Pivot, which is shamelessly ripped from Kevin O'Leary. He was talking about how he had this pizza investment that was B2B. It's like a pizza oven, which is pretty cool. And then he pivoted during the pandemic to start dealing at DTC. And he's like, this is the great digital pivot. I'm like, I think I'll use that, and so that's where it came from.
Definitely. We always bring him on Benzinga whenever we can. So definitely a shout out to Kevin O'Leary.
Awesome.
Yeah. So let's dive a little bit into, some of the criteria, the possible target. So again, this is a SPAC without target announced. So I know you may be limited in what you can and can't answer. So, please don't get yourself in trouble here, and don't answer anything, that's off limits. So, what in your document, we see a long list of criteria that you are looking for in a target company. Can you kind of pick out, what are the top 3 or the top 5, big criteria in a target company for this SPAC?
Okay, great. And obviously, the SPACs reserve the right to look at a broad set, but we do talk in our S1. I invite everybody to look at it, Omnichannel Acquisition Corp, OCA. For me, I'll tell you what what resonates with me. Consumer businesses that are mission driven. They stand for something for a variety of reasons. One, obviously, this is where the world is going, and this is what the millennial and Gen Z customer expects. There's some incredible data. Something like 77% of customers want their CEOs to take a stand. So if you're in a consumer business, you need to some extent mirror those preferences, and you stand for something. And when you are a mission-driven business, that is what unlocks the flywheel potential. When you stand for something greater than just transactional commerce, you get permission to go deeper into the customer's life. And that is what can create an enormous, platform. So I love those businesses that are notifying you of something that's going wrong in the universe. You're doing something about it to help do something about it. And you're unlocking the value. And by virtue of that, you develop a strong bond with your customer and you can go wider and deeper. I look for companies that have traction. I'm so crazy, right, that I might actually want to see, revenue and traction and a history of, performance. But I'm most passionate about omnichannel, and I talk a lot about that in the S1. Companies that are looking to be omnichannel, multi-platform, not just omnichannel and transaction, but omnichannel and communication, who are willing to embrace TikTok and Pinterest and understand what it means to sell and have a pure market segmentation strategy. Those are the type of great businesses that I'm looking for. And obviously we're in the middle, still in the middle of the process. So I'm limited in what I can say, but I would invite everybody to visit our website and our S1 and give it a read.
Perfect. And again, I know you may be limited in this answer, but, you talk omni-channel, right? So retail, e-commerce, direct to consumer. Are you looking at companies that may be missing one of those pieces, or would you potentially look at a company that already has some omni-channel, in place, but, you can grow that business better?
That's a great question. Make no mistake, this is a strategic SPAC. This is not a financial SPAC. This is not a bunch of financial engineers who are looking to do a transaction and maybe a flip and get a promote. This is a group of people who are only here to provide value and who are not afraid to do it. So if you look through, if you try to dissect the different people that are on my board and advisors, you'll see multicultural marketing. You will see last mile logistics, right? You will see, obviously, Gary Vaynerchuk. You will see Christina Tosi for reverse engineering brick and mortar. You'll see Al Carey, who has the ability to get in touch with any retailer in the United States as the former CEO of Pepsi. You'll see Bobby Brown, right? Who knows what it means to build a brand, not an overnight, fly-by-night, customer acquisition hack business that is not really a brand. It's a moment in time. She's been around and relevant since 1995. So Bobby is there to figure, how do you create, a brand? And then there are three overarching buckets in that group. There are operators, there are public company experts, right? And there are people who can go ahead and go through the journey of deal making, because deal making is important. When you have a SPAC, you need to be able to execute, right? This is not easy. Forgot who said it the other day, but it's easy to raise money. Deploying it is hard, right? So you want to make sure you have those three buckets covered. I think operators, public company experts, and deal makers. And throughout my team, I have all three.
Perfect. So one of the things that stands out is obviously your relationship with the New York Jets and the Miami Dolphins. We've seen so many SPACs hit the market and go after the sports market, right? Sports team ownership, sports media. So as you look to omni-channel, is there any play there possibly for the sports market as well?
Well, in the S1, I don't emphasize sports market. Again, certainly would be open to anything. I understand sports. I've been working in sports. I have worked in sports from 2004 to now, as vice chair of the Dolphins. That title is more honorific than anything these days. I've paid my dues. At some point I was the interim CEO of the Dolphins. I was basically ran the New York Jets, but I've done that work. I'm happy now on Sunday to watch the game rather than be part of it. But I certainly understand the space. I understand media and whatnot. And my view is the best decisions are relative decisions. I say bring me info, bring me data. I'm not afraid to diligence any consumer business. So I'm receptive to anything, and I am excited about the disruption in the sports space. I'm a big investor in the Drone Racing League. You were talking about gambling before, but I was the first investor in the Drone Racing League off of PowerPoint many years ago, and now we're getting gambling approved in different states. So I've been watching that space pretty closely.
Well, as an avid Dolphin fan and been struggling for a couple of years, I'll definitely be rooting for you always, man. I've seen how we've grown, definitely since your leadership. So
Thank you.
On the Dolphin side.
Steve Ross has done a fantastic job. Put a lot of money into the franchise. It's hard to win on the field. I have zero to do with that, win or lose. We have a great CEO there now, Tom Garfinkel, who's transformed that franchise. And that's, I am passionate about the business of sports. And that's where I've spent a lot of my career, but I cannot take credit for our on the field success, FYI. But yeah, it's pretty exciting to see.
Hey, we'll keep rooting. We'll see how Tua does. All right, guys. So the last question that I have is something that I caught in the S1. So, we talked a little bit about certain trends. So one trend that I'm looking at, and it's interesting, is that it's mentioned about immediate gratification. This is something that I notice very often from the social world, and something that I pay attention to often is that we keep looking for more and more leaning towards that instant gratification. Can you explain me why you kind of mentioned this in the S1, and how do you feel this actually pertains to certain trends?
Great question. And back in the day, I don't know if those who remember a company called Cosmo.com, Kozmo. And in 1998, Cosmo would deliver everything to you. A little guy in an orange jacket would deliver everything to you want in under an hour, which is pretty extraordinary. And ice cream, DVDs. I worked there as a director of communications. One of the coolest jobs I had. This is 1998, pre-smartphone, and it worked. We had 10,000 employees, had raised hundreds of millions of dollars, and then poof, right? The dot-com correction. Now 20 years later, why I mention it is that has become the expectation now, right? It just is what it is. If Amazon can deliver everything to you and it arrives by your door same day, the last mile will finally be bridged. It's happening. It's being figured out. And I think it's a race between those who have existing infrastructure like Walmart, who are closest to the customer, and Amazon, who's bridging that through rapid shipping. They're going to converge, but regardless, the expectation of the customer is instant gratification, otherwise known as frictionless commerce. I want it today. I want it in my office if I need it. I want it in my home. I'm not saying anything anybody who's a consumer can't relate to. So if you can't figure out how to meet that expectation, you're going to be left behind. And whether you like it or not, Walmarts and everyone and Walmart and Amazon are setting the standard that you need to be able to deliver instantly and satisfy that impulse. So that's why I emphasize it. And that's where a lot of companies, I think, struggles. How do I fulfill that? I'm a little DTC, or I'm a pure play DTC. How am I going to be able to handle that last mile infrastructure and logistics? And so folks on our team, have that expertise.
Yeah, we deal with that all the time, dealing with the stock market world that everyone wants the next 100% pick. So definitely.
Oh my God, talking to my
We see
kids,
it.
my kids will ask for, advice generically, and I try to give them like really boring things. And I love what you talking about trends before. I was trying to explain, hey, lithium, right? Lithium batteries, the lithium CAGR is projected anywhere between 13 and 25% for the next decade. I was like, why don't you find a nice little sleepy ETF to fall in love with? And just, that's it.
Yeah.
That's not interesting, Dad. So I don't know what the word investing means at the moment, but it is. Like, it's otherwise healthy. Everyone's engaged. People obviously have more time on their hands, and so I'm all for people paying attention to it. I'm also all for a balanced, view, which is why it's great what you guys are doing. Talk about trends. Look at trends. Bet on a trend. Imagine if you had bet on Elon Musk and treated him like an ETF. I mean, forget game over, right? So I try to explain it to my kids, but they don't care. Nobody wants to hear what I have to say.
Yeah,
they want the next GameStop. That's what the kids want.
They do. I was like, I can't help you. I can't help you.
We call it the thing behind the thing, and there's always something there. And if you can find that, I was taught in school to find the underlying asset, and if you can find that, then maybe you can find some different plays, and where the company really builds the revenue from.
Right, and use this time to refine your pattern recognition skills so that you can sort of see and recognize it next time. I mean, I love one of the ones out there you were talking about before is what Archer's doing. I happen to know those guys, and Mark Lowry is a big proponent of it. Mark Lowry ran Walmart. Mark Lowry is right almost all the time, right? He sold diapers.com. Then he, sold jet.com for like $3 billion to Walmart. Now he's backing this and other things. Like, sometimes you also want to look for ponies that you can get behind, and people that you can back. But what Archer's doing is logical, and somebody's going to win. I don't know if it's them or one of the other ones in the space. I love looking at macro trends that I am certain. Electrical vehicles, I'm obviously certain. If anybody who drives one knows we're never going to go back. Lithium batteries are needed to power that for the foreseeable future. Those are the kinds of things I love looking at too. And again, like I said, try to tell the younger generation, but nobody's listening.
Yeah, that's why we always talk about LiDAR plays and the move to autonomous, and that's the technology behind the thing. And there's definitely going to be someone in there that's going to be taking some advantage of all these kind of demand that's coming to EV.
And I don't know how much you guys have spent talking about this, but even NFTs, right? I mean, you have to look past. I looked at, crypto punks. I couldn't get overly excited about anyone in particular. I mean, I was at dinner with Gary Vee and we were looking at one. I was like, I don't know. I just can't get behind one of these. But the trend is real, right? I've been in Bitcoin since 2013. I mean, there was a period of time where I was mining it, and it's just math, right? What's happening now with Bitcoin was foreseeable many, many years ago if you decide to pay attention. And I've been an investor in Coinbase now since, I think, 2015. I mean, so pretty early. And what I always tell everyone, you have the information right there. It's called Google. Like, there's no original thought. All you have to do is put in the work, but you have to have the courage to act on opportunity before there's evidence. Once there's evidence, the arbitrage is gone, right? Like, so you have to have the conviction. But back to a point about lithium and everything else you and I, we're talking about right now, it's out there. Just go find it and then be willing to make the leap. But a lot of times people don't want to bet on trends. They want to bet on a moment. And I don't think that's the way to do it.
I definitely agree. Chris, you got two more we got?
Yeah, awesome. And I didn't know that you were an investor in Coinbase. That's exciting with the upcoming IPO. And, I heard you say NFTs. So we're looking to expand our content NFT. We have someone coming on our lunch show later this week to talk NBA Top Shot. So I know, you're heavily involved in the NFL. So, NFTs definitely looks exciting to me. That NBA Top Shot has just taken off. And, again, when you look at trends, Google Trends, NBA Top Shot is now, higher in the trend searches than blockchain. So it has just, skyrocketed in demand. A couple broad-based questions here. So obviously the COVID-19 pandemic has changed things. That's a big focus of your SPAC and your business model with Omnichannel. But how has it affected the deal negotiation side of things? Has it impacted, traveling, Zoom meetings? What has that changed with, the negotiation process?
Yeah, I think one of the legacies, once we're on the other side of the pandemic, I think one of the legacies when we have 5 years of data to look back is this is going to unlock one of the most explosive periods of innovation and growth, because just as I'm focusing on removing friction from commerce, this has removed friction from transactions, right? So I have a lot of, we're the owners of the largest privately owned soccer tournament in the world. It's called the International Champions Cup. I built it with Steve Ross and Danny Silman and Charlie Stilitano over the last 8 years. That business takes me all over the world. Been to the Russia, to World Cup. I've been everywhere. But what I found in that business pre-pandemic is if we were trying to do even the smallest amount of work, it's like, I'll meet you for dinner in Spain. I'm like, I have to fly to Spain for dinner, like just for 20 minutes of work, fast forward now. And I think the standard of what it takes to make somebody get on an airplane is dramatically higher. And we're going to benefit from it. Innovation will benefit from it. So I think it's remarkable how much you now can achieve via Zoom. Isn't it amazing? Like Zoom existed a year ago, but we wouldn't use it as a business tool. And what the most important change that I think happened culturally or professionally, especially in deal making, is that the decision maker who prior, maybe before would have had a bias towards face-to-face for the whole transaction, is now willing to do it over Zoom. And deals now get consummated face-to-face. It's still important to look somebody in the eye. I don't care who you are. If you're doing a deal and you have not stepped foot in a person's office environment, walk the factory floor, make sure the CEO, when he sees anybody on the line is like high-fiving somebody, do they have EQ? Are they showing empathy? Like if you can only pick up those signals if you walk in an environment. So I will hop on a plane still and do what is necessary, or will meet somebody face-to-face before consummating a deal. But the ramp up can all be done virtually, which means your ability to look at deals is now like 5x, which is extraordinary. And hopefully the quality of what comes out of it collectively in the SPAC space gets better. But in terms of post-pandemic, I really hope we hold on to the innovation and the acceleration of transaction via virtually, and we don't, just resort to before, like FaceTime that was kind of unnecessary. That's what I'm excited about. And I think about all these businesses out there. Think about it before. Think if you were a young person with an idea somewhere that didn't have access to capital and you were trying to get going. Think about all the barriers. You first needed to go ahead and have an office to some extent. You needed a team. You needed to have all the the veneer of a professional operation before you could even talk to a VC. Then you'd schedule a meeting with so-and-so VC, fly across the country only to find out that the meeting was moved. I mean, all this friction. Now the expectations are so much lower. Oh yeah, it's okay that you have a virtual team. I didn't even expect that you would have everybody. You don't have an office? That's fine. You just have a Zoom backdrop. That's going to enable a lot of people to get going that couldn't have gotten going before. And that excites me. And I hope we stick with that.
Yeah, definitely. Zoom became a verb.
Right.
And it's been a
and also an albatross from time to just turning a Zoom video. Like, please, can't we just use the phone every once? I need my 10,000 steps. Like, why do we gotta only do video?
Yeah, there you go. I do love getting that insight. That's one of the questions we've asked. Some of these SPAC companies is how does it affect the deal making process? And I love your comments on the face to face and the seeing how the CEOs interact with their employees. I think that's a key and could be, a big part of, the deal-making process. So I appreciate your honesty there. I think that's going to do it for questions today. We appreciate your time. So again, guys, we have with us Matt Higgins. He is the chairman and CEO of Omnichannel Acquisition Corp. That is ticker OCA. So thank you, Matt, for, taking the time out of, I'm sure, your busy schedule to join us on the show. And we look forward to following the progress. And we'd love to have you back on, when that deal announcement comes.
No, thank you both. Love to come. Love that you're sort of explaining the space to everybody. And I'm happy to come on anytime, talk trends, talk whatever you want. And certainly post-deal, definitely come back on.
Definitely. And go Fins. Go
Fins.
All right.
Go Fins. All right. Thank you.
Appreciate it. All right, guys. Hey. As you guys see here, we work hard to bring you guys these interviews and definitely reach out almost every single day to multiple companies trying to get you guys these executive interviews. So definitely, if you enjoyed and you got some value, hit the like button, smash it down below. Let's hit the subscribe. Let everyone know where you can get the SPAC information. There's still people that don't know that we got a show here, guys. So you guys help your friends out, help everybody on Twitter out, let them know where the best SPAC show in the world is, and it's right here on Benzinga, guys. So Chris, what you think of the interview?
I loved it. And, sometimes it's hard to come up with, questions for these teams because, again, they can't just come out and say, we've looked at X company, we've looked at Y company, here's who we like, here's who we don't like. But to get that insight on the deal-making process, right? And I think that was a key, as I just said, still looking forward to those face-to-face meetings. And then he talked about that management team, right? So many people attached to this SPAC. from the founders, the advisors, and they all bring, strong experience in different areas. We talked Gary Vee, we talked the former CEO of Pepsi, you talk Milk Bar, you talk, all these different things. They all play a key role in that omni-channel experience. And I think, the fact that Matt here talked so much about Google Trends, right? And trends, and, who's going to be left standing with these business transformations going on, that really sold me here on this exciting SPAC.
Yeah, you guys see me here sharing some of the love. Definitely a lot of love there, a lot of insight given, and one thing I loved that he built off of was the trends, guys, and that's really what it's all about. And I think that he's at least noticing that, hey, there was a trend there for SPACs itself. And that gave him an opportunity to start looking for some of these companies. So I'm going to be really interested in seeing what company comes out of this. But to tell you the truth, guys, it's pretty interesting. Right now, I'll put up the chart here. I'm going to go ahead and I got the chart here. It's at 10.07, guys. So really interesting price here. To give you guys some insight, the last time it was around this pricing was on the 12th of January. We have a low on here. I see a low around $10 right even, and we dipped on this day below $10. It looked like the low here was $9.92. So I might look to see if I can get this one near 10 or near this kind of area, but I'm going to keep an eye on this one. It'll be really interesting in the trends that kind of build out of this. And like we mentioned, there's a bunch that comes out of this, and in the Omnichannel is not something that's just only towards this. So definitely, guys, take a look into this trend, into these new trends that are coming, and let us know if you guys see a trend that you guys want us to kind of expand on. Look for something, let us know in the comments. That's what we're all about here on SPACTAC. We try to make the show about you guys. So if you guys have a topic you guys want to hear about, a certain SPAC, let us know. We'll do some research. I know like a lot of people in the chat hit us up on Twitter, so definitely hit us up, guys. You guys can see our tags down below. We're going to go ahead and start wrapping up here. Up next, you're going to have Zinger Nation, but really we're all Zinger Nation. It's really Power Hour, guys. The Power Hour is coming on next. And one thing I definitely say to look out for is at the end of Power Hour, we're going to have that Kathy Wood interview. And if you don't want to miss this, guys, I know the whole market is going to be watching this. So if you don't want to be the one missing out, definitely stay with us, guys. If you look at Benzinga right now, you can go ahead and hit it and then hit the bell. That'll go ahead and alert you when we go live on that particular video. So definitely want to give a shout out to that. And if you guys, you know what, I'll go ahead and I'll also put up the link here for you guys so that you guys can see that and get into that. Chris, anything else you want to leave off with?
We talk about with these SPACs, betting on that management team. I think there's a great management team here from Matt, and an investor in Coinbase, a believer in crypto from early on, an investor in the drone racing league. He's got Gary Vee with him talking NFTs. It just seems like this screams, that he knows what the trends are in the market. So to me, that's a positive thing. But again, as Mitch just said, Kathy Wood, one of the biggest names in the investing world, she's joining Benzinga today. I can't stress, how big of a deal this is. You've seen interviews with her elsewhere, but, we're going to get some questions that maybe she hasn't answered. I'm hoping we get to some SPAC questions from her, and we'll be sharing that with you again tomorrow. But if you can, tune in live, 2 p.m. Eastern time. But if you can tune in before then, we've got Power Hour Zinger Nation, coming up next at noon. And I'll leave you off with, we do have another interview coming tomorrow. So we have the president of App Harvest, that's ticker APPH. That is an indoor farming company focused on tomatoes right now, but growing to other areas. We have him coming on the show tomorrow. So very excited to hear all about indoor farming and that growth market ahead.
Yeah, definitely, guys. And if you haven't, I put the link right now, guys, the SPAC newsletter. Get your newsletter every single morning. You're missing out I mean, really, I think we should be charging for this. So if you don't have it right now, you're definitely missing out, guys. Absolutely free. Hit that link. Go ahead and get your SPAC newsletter. This is going to help you guys out because at the end of the day, don't wait for the headlines. Get them in the morning. Hit that SPAC newsletter. Let's see a whole bunch of people join up today, because if you're not, you're missing out, man. And you can't be missing out on these SPACs. You got to be quick to the deal. And I'm going to be looking in a little tear-eyed today because I'm still a little tear-eyed on Sports Radar. But hey, that's how it goes in the SPAC game, guys. You spin the wheel, you try to get in the right management team, and then you see when the deal comes. It's a patient game at first, and then it gets exciting once you start getting those agreements to come out or rumors. So definitely hang tight right now, guys. I've been seeing the market, take a hit. This is when you got to really assess where your risk is, what your capital is that you have, and why you should always, and I recommend this, and we're not financial advisors, but at least my opinion, you should always have some cash in your account so that on days like this, when you're getting these deep discounts, you can look for your best high conviction plays to maybe average down a little bit, get a little bit better position. It's not always going to be the best result if you do that, but one thing it will give you is an ability to improve your average. And that's why I bring it up here. Days like this is when I try to figure out, hey, did I set the right risk profile on here? And I got to stick to the plan, because at the end of the day, the man with the plan is the one that gets the profits, at least from what I've seen in my data. So hang tight, guys. We'll be with you guys like always, guys. SPACs Attack will be keep working hard. I'm going to be interested in seeing how Dish ends on the day. DraftKings, we got Horizon, we got ChargePoint that changed over, so definitely check that one out, guys. CHPT, XL Fleet with those news, Hims, bunch of SPACs out there, guys. So keep it going, guys. We won't stop, guys, on the SPACs Attack. Like always, we'll see you guys next time on SPACs Attack, baby.